Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 8th of July, 2020. This is episode number 1792. As always, the risk disclaimer: derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a very interesting setup here in the markets. We have a mixed bag. We do have some safety assets that are leading, with some risk assets that are also leading, and then vice versa. Gold is leading the pack today, up $8.10. Gold trading at $18.18, 18.18. With the Nasdaq following. The Nasdaq's up 39.75 points, up 0.38%, trading at 10,572. Wow. The Bund is up, which is interesting. Along with the Nasdaq, you have the Bund being up. The S&P is higher by 5.756 points. The Dow Jones is up 29 points, which is basically a rotation at this point. Crude oil's flat from yesterday's settlement. The Euro stocks are the laggards, and so is the DAX. The DAX is down 72.5 points, or negative 0.58%. Overall, just very, very mixed. And so we have an overnight session in the S&P, which I'll go over in a minute, that is completely balanced. We haven't seen one of those in a little bit. So for once, the action wasn't all taken away overnight. So that's where we stand. Looking at the calendar, so what is the risk allocation for today? What is the market sentiment for today? It is mixed. It is mixed. It is completely balanced. It is important to come in with that as a baseline to launch from. Today, there were several items to look at. We had ECB's windows. There's a lot of political kind of squawking on the news from Europe. Angela Merkel is in Brussels, the capital of the Eurozone. First time she travels since the pandemic started, and there's a lot going on there. But today, the key elements, of course, are the crude oil inventory for energy traders. We have Fed's Bostic at 12:15, and then this evening we get inflation, the inflation rate out of China, expecting 2.5% inflation year on year. That comes out at 9:30, and that pretty much clears the deck for the day. I mean, as far as what's planned. Let's do what we always do and hop on over to the review segment. Before we do that, I wanted to make sure you knew that I will be on Futures.io tomorrow. I'm putting the link in chat if you are on YouTube chat. Let me see if I can find the Periscope. If you're on YouTube chat, and we're proud to be a sponsor of Futures.io now, starting the beginning of this month, and as a result, we're going to be on there to talk about edge pools, which is a feature that's new and that was created by EdgeClear, the team. So I wanted to make sure you attend it. Again, that is Thursday at 4:30 Eastern U.S. time. So let's move on to the review segment. So yesterday I had a bit of a mess with my charts. There was an issue that was fixed. It had to do with the holidays. And so my charts were naked charts. I remember the days of naked charts. The primary scenario, if you recall, was looking for the market to pop higher, to open out of range and pop higher. And the number I was looking for yesterday was 65, 64, 65 for a test right here. And then I was looking for the market to drop, consolidate at the 43 right here, consolidate at the 43. And I was looking for 35. If you recall, I talked about the 35 as a key target below. Hopefully, you'll remember that. You remember that from yesterday. That was the main plan. Push up to 65, drop back through the open, come down to 43, 45, and then ultimately the key target is 35 for yesterday. Let's take a look at how that played out. So we got the reversion back. We got the push back to into the prior day's range. But this 65 area, the low volume node, did not hold. We ended up pushing to 69.5, pulling back to VWAP, a kind of a nice little setup here, pulling back to VWAP. If you're a part of Convergence membership, you would have seen the footprint or the volume scope of this setup before the next leg up. We pushed to create a double top with the prior day. Now remember this day here, Monday had 3174.50 as the high a day, and yesterday it went to 3174 and a quarter. So we missed by one tick. We missed testing the high by one tick, creating what is technically a weakish high for some people. That is called a double top, and most look at a double top as a strong resistance. Not so. For me, I kind of look at it the opposite, depending on what the profile shows. And what this profile is showing is it was accepting higher prices and it was approaching that area. It didn't manage to break. The next time we turn up and get back into yesterday's range, that is going to be a strong launching point to squeeze shorts out, as stops are likely to trigger at 31.75 or above. So anyway, so we pushed much deeper, so it was very difficult to get on this short. It looked like it was likely to fail. We had a very clear impulse here. Let me clean up my charts. We had initially impulse, pullback, and then we had a secondary impulse, pullback, and the expectation is for continuation and end up kind of falling off. So very difficult to get on the short. We extended the range up, so definitely off the shorts at this point. And then finally it pushes back into the opening swing here, holds VWAP mid from below, and then we get a bit of an impulse down. And now we're looking at breaking the IB low, which gives us neutral. And then we are likely now to push into 31.35, which we did. So we ended up executing on yesterday. Was scenario one almost exactly in shape, but it was very difficult to get on the short. As the rotations up, as you can see here, were pretty aggressive. Let me kill this to clean up the chart a little bit. We're pretty aggressive, pushing from 31.59.50 to 31.74 and a quarter in one swing. In one swing, that tells us that buyers are in control. So pretty hard to get on this. Yesterday's profile, if you look at it, shows a lot of price discovery. The market is moving away from balance at the top. And most important is what? For those of you who've been around a long time, what do you take away from yesterday that is really important? There are two key things. I'm going to give you 7 seconds to try to answer this. Unfortunately, the lag here is an entire 15 seconds, which is too long for this broadcast. It means I'd have to sit there and be quiet, and you'd have to listen to quietness for 15 seconds. So a couple of things to note. Okay, there you go. You got it. Neutral, extreme down. We had a push through the IB high. We had a break of the IB low, so now we're neutral. We're looking for neutral normal if balance was to continue, and it ended up breaking lower, and we ended up closing below the initial bounce, and we ended up closing near the low, near at the low. That's a neutral extreme down. And on neutral extreme down, we expect Globex to continue lower, which it did. So now we've tested below the prior week's close, Thursday's close, and we have moved from a balance into neutral extreme down. That is quite difficult for that makes things tricky, tricky for the longs from here. So as long as it manages to hold this 31.50 to 31.55 area, 52 being the overnight high, as long as it holds it, we are likely to make our way down to 3104, which is what which is what I talked about Monday. Is if it's not able to push through to 3189 and starts to roll over, actually yesterday starts to roll over, then 3104 is the next key balance area. I'll show you that. So the one thing was neutral extreme down. Our buddy Ned, neutral extreme down. That's important. Notice that we had a lot of volume take place over the point of control. We'd expect that, and we got that. Very methodical. In addition to that, we have delta moving in the same direction. So there was no divergence on the way down. There's uh, nobody lifting on the way down to support, to build a position to support the push higher. The aggressor was on the short side. So again, my bias for now is to the short side as long as we remain below 31.50.55. And we're currently trading at 31.40, the key target being 31.04. Okay, so yesterday, pretty nice to see the auction behave methodically. However, I could sit here and be academic and whatnot, which is easy to do. No skin in the game about how the auction's working perfectly, but I have to admit it's not. It hasn't been. It's been somewhat difficult for the last 6 weeks or so to get on something. Like it's not telegraphing as it normally does, at least not the way I see it. And it makes it a little more difficult to just get on at a really where you just get on and you can, sit for a bit and then you can see you've got something, and it just runs. It's been very difficult to do that. I mean, you can imagine what this run up here, what that's doing to the shorts and to the fact that they keep hopping in on every piece of bad news when it comes to COVID-19. So there's two-way interest here. The market still has some good volatility in it. We've been lucky so far this summer. It is July. It wasn't so long ago that July brought us 8-point days, 8.5-point ranges on average, and we're seeing more than that. So there's something to be thankful for, of course. But here's the lay of the land. Now remember, each one of these profiles represents an RTH session, and we could see that we've been, as I said yesterday, we've been one-time framing up, and then we're breaking that one-time framing yesterday, and that is the reason why scenario one was looking for a short, and 65 was the target of the entry target of that short. Ended up going 9 points beyond. Fortunately, there's just no way to tell. But we ended up with a lower high, lower low yesterday. So if we maintain a lower high today, and ideally we stay below this 50-55 area, as long as we maintain a lower high, then we may trigger one-time framing down into Thursday and Friday, and we would then likely to push into the next balance zone. Now let's look at this profile here, this little yellow profile. Let's clean this up a little bit just to give you a better view. So if we look at this profile, we see that there's a little bit of balance up top. We just put that in. We have a balance area that centers around 35, okay? And then we have this key balance area and the point of control centered around 104, 104 to 3100, something like that. Okay. And so as the market pushes up, we would expect, we would expect for it to get tangled here, push up here, get tangled here, push up here, get tangled here, pull back here, get tangled here, pull back here, get tangled here, and then, you know, make it through the low volume node. So it gives us a chance at the next area, which is 3020, get tangled at 3020. That is the normal process for an auction. And so when we look at this screen here, this clean screen, we can see tangle, a little bit of tangle there. Of course, this is forming, the profile includes these areas that have been formed, but just remember these areas when we come back up. If we happen to drop below and we come back up, we expect it to tangle here, push up, tangle here, push up, tangle here. The next tangle area above is 3189.5, and that is the key balance area above the gap zone that we just closed. So keep an eye, my point being, keep an eye on the big picture as you're trading day to day as a day trader, okay? It's important to understand that there's a much bigger thing than you and me, um, much bigger thing than you and me trading intraday in our little time frame of whatever it is, minutes to hours. There's a bigger thing out there, and that is the entire process of the auction. The other thing I want to bear in mind, and I'll get off my soapbox here in a second. I want you to bear in mind, and I ranted about this, and I did a tweet on it that got like 65,000 views or something like that. It's this idea that things are going to hell in a handbasket, and it's just a terrible economy and COVID and $42 million jobs lost and huge deficit bubble. I think we picked up $1.2 trillion last year in the deficit with that tax package, and we're picking up more, and it's just going to hell. And it's important to remember, and I kind of learned this very early on in my training as a professional trader, is that the stock market represents about 60% of the economy, 65% of the economy, the bulk of the economy. But it is not the economy. The stock market is a forward-looking mechanism that is pricing things in based on many different variables and factors. Most importantly, the profitability of the companies within it, or the expected profitability of the companies within it. So it doesn't represent, yes, the market responds to news. News to me is important. I don't think I've ever traded in the last 20 years without a news feed, a live squawk feed, but it just creates a temporary deviation from the auction, and we call that the scene of the crime, the price at which that happens. But the fact is, the stock market is not the economy. The prices that you see, the S&P is not the economy. So don't get too caught up into what this guru and that guy and this guy is saying. Just pay attention to the auction. Please, like, if you can take something away from these trader bites, it's the auction. The auction controls and tells us in real time what the market is accepting and what it's not. And the way I'm showing you this works is it gives us an opportunity. When it does show us, it gives us an opportunity for what might unfold next, because we can't bet on what just happened. We cannot. It's just academics if you think you can. What you have to bet on is what is likely to happen. And so the idea is to see what has happened so that we can create a picture based on fact, the auction, not what this macro guru newsletter whatever is talking about. Is to look at what the auction is doing. Like here, people might be saying, oh, earnings are the highest a bit. This thing could pull back to 3100 here and blow right through to 3189, and next thing you know, you're at all-time highs and people are scratching their heads. Just follow the auction, identify where the market has accepted or rejected prices, period. Acceptance, rejection, acceptance, rejection, acceptance, rejection. Anyway, I'll move on. I didn't mean to turn this into a trade wisdom session, but it's important it's important to understand what we're dealing with here. We're dealing with randomness and probabilities in trading. If you cannot get comfortable with the idea that if you're not getting intimately comfortable with the unknown, with the idea that there's just no knowable outcome, and the fact is, we just have to look at what the market is doing and is accepting, and betting on what's likely to happen next. And the size of our bet, the cost of our bet, is our stop or our daily loss limit. So if we're going to give up our stop, the amount of our stop, and that could be $50 or it could be a few $1,000s. If we're not comfortable giving that up, then we don't have a solid understanding of what the auction is doing and what is likely to happen next. The fact is, the outcome is always random. Okay, so here's what's happened overnight. So we opened 5 o'clock my time here in Chicago. We test up. We had some liquidity before the top, but overall it didn't get tested at all. We test the other extreme. Remember, the open is right here. We test up, we test the other extreme, we collide down here with liquidity, and then we go to the far extreme, and then we finally collide with this liquidity that's been here all along at 3150. We'd expect 3150 to have liquidity, and now we're pulling back to the other extreme higher. We pull back to the other extreme lower, and so what does this look like? This is basically balancing, consolidating overnight, the entire night, with some really interesting brackets, right? The 3125 has had a lot of volume in it. Remember, 3120 is important in this region, and it has checked the high, checked the low, checked the high for higher, found sellers, checked the low, found buyers, and now stuck in the middle. So remember that this carries over into this morning. So it's important to see this and understand that the market is in balance coming into the overnight session, and it's bracketed by this liquidity, right? So the next liquidity pool up is around 3155. That coincides with that level that I talked about above. The 3155 is basically the low of Monday, and a key area for yesterday. It's the breakout area for yesterday. It's a key LVN area, which was the 3156 or so. So this is probably legitimate liquidity. This is legitimate liquidity. The 25 is, and so is the 20 down here. And so coming into today, we need to come to terms with the fact that after a neutral extreme day yesterday, we may have a balanced day, and whichever way it breaks is likely to have a continuation. And of course, it all can be thwarted by news. Anyway, so that's the liquidity picture. Again, 55, 66 above if it gets up there, but we're looking at 55, 50, 25, 20. Those are the key areas to pay attention to. If those coincide with my areas, then these become very important execution areas for today. So let's move on to what's expected for today. Again, I'm sorry this has gone way over, but I really wanted to go over some things today with you that are really important. So what is the expected action today? You'll have to excuse my cat over here. She's feeling kind of lonely. The expected trade today after yesterday's neutral extreme with this hump right here at 35, and we're above the point of control. The expectation is an open auction. Hello, an open auction that responds higher. Holy cow, she's going nuts. An open auction that responds higher. I'm looking for 3150, potentially pushing the 52, and I'm looking for an impulse down and for it to test yesterday's close and this high volume node again at some point today. I'm looking for a lower high from yesterday, not necessarily a lower low, but potentially it may get there. So that's the main scenario for today. Please temper your expectations given the way we're opening up, the way we traded last night. it is likely to be relatively choppy on the open, but the more choppy it gets on the open, the much stronger the move is going to be. So don't let it lull you into sleep. It is likely to then make a big move. If it drops immediately and goes into 31.35 and closes yesterday's close and tests that low, look for an impulse higher if it has one, and look for it to creep back up towards 31.55 and to close somewhere near that high for today. This sets us up for a test of tomorrow, and then the hypothesis that we're likely to move to 31.04 gets put on hold for now if that's the case, if the impulse is higher. Okay? Anyway, I'll leave you with that. Don't forget to register for the webinar tomorrow, if you would, at 4:30 Eastern with Futures IO. Thanks for tuning in. Take care.